Ladies and gentlemen, welcome back to the channel. Tesla stock had a big day today, and it's going to have an even bigger day tomorrow. And here in this video, we're going to discuss the delivery numbers that are going to be coming out tomorrow morning before the markets open, how this is going to impact Tesla stock. In my view, we're going to take a look at the option activity today, how hedge funds and institutions positioned for tomorrow's catalyst. Tesla broke out to a new, get this, 10-month high today. Yeah, no surprise, right before delivery numbers. Someone out there knows something. They're buying some very bullish options in Tesla that you need to be made well aware of. Again, I will share my estimates for deliveries, but some betting markets are pricing in or betting on a over 500,000 delivery number for tomorrow. So we have a lot of work to get into. We do have an update on the government shutdown, but more importantly, what Fitch just said about a government shutdown that you should hear. If the government is not funded and reopened by tomorrow, then we're not going to get some of your economic data sets, but we'll go over what we will get coming tomorrow. Hit the like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of today's episode if you want to come join the trading community. We'd love to have you. But with that said, ladies and gentlemen, Tesla stock today was up about 3%, again, hitting a 10-month fresh high. And I think after tomorrow, we're probably going to be at a new all-time high because I believe deliveries are going to be estimates. Now, the estimates from different firms are going to vary. Anywhere from 430,000 to 500,000 is kind of where people are at, a mid-range of that. I think the stock is pricing in, which is the most important thing, between 445 and 455,000 deliveries. Anything higher than 455,000 deliveries is likely seen as positive. Anything below that is likely seen as a neutral to a negative. Judging off of the rally today in Tesla stock, it's safe to say we're probably going to have a really good delivery number tomorrow. Okay, now, why do I say that? Well, Wall Street, they kind of just know things before everyone else does. Okay, they just know things. They know people that know things about companies, okay? That's just the way it works, and that's why following the money sometimes can tell you important things, okay? So, as I talked about in prior videos, here are my estimates. My base case is 479,350. That's my base case. Like, what that means is that is the most likely outcome for Tesla deliveries, okay? That's the highest probability I would put it. But best case scenario, 512,000 deliveries. Worst case scenario, about 459,000 deliveries. So I think even in a worst case scenario, it's seen as neutral to positive. Best case scenario, it would be very positive. Base case scenario is pretty positive. Okay, 480,000 deliveries would be seen as good news. It would send the stock higher, probably enough to get us to new all-time highs. Question is at that point, how much higher do we go? How excited do people get? That would be to be continued at that point. We would really have to see the market's reaction and ultimately what happens in the event the base case is realized. But anything higher than my base case, and yeah, the stock's going well into the 500s. Now, lately it's been more about AI, autonomy with Tesla, Robotaxi, and Optimus. But today even, Tesla launched the Model Y performance variant in the US, and they also raised prices on leases. If Tesla is raising prices on leases after the $7,500 tax credit just expired, that's a pretty big sign that deliveries are not expected to collapse. Demand is expected to hold up, and Tesla wants better, essentially financing terms. Like that's really what it is with raising the lease pricing, right? They're not willing to subsidize as much of essentially the interest rate. Long story short, they think there's going to be good demand to continue. So that's big. Again, the focus has been on AI, autonomy, robotics as of lately. That's what the analysts have been talking about. But to get the delivery story to perk up again, to get, deliveries to do well, Q3 is definitely a positive. But also, I think deliveries are going to be better than expected for Q4 as well, as some of the, pull forward from Q3 likely leads into Q4 as well, although we're not going to get those numbers until January 2nd. So those are kind of my raw thoughts on the delivery numbers. Anything lower than the base case, 479,000, it's going to be a little bit of a shocker to me personally, although, again, you really want to see 455,000 or higher. That's going to be translated into good news for the stock. Anything lower than that would be a real head scratcher. Like, what happened? Because we get pretty good data from Europe, China, rest of the world, essentially. But the US is the wild card. So if numbers do not come in good tomorrow or not as good as expected, it was weakness in the US. If they come in much better than expected, it was a lot of strength in the US. Again, judging off of the 10-month high we're seeing in Tesla stock today, the day before deliveries come out, I'm going to assume that deliveries are going to be really good. The kind of option activity that we are seeing today is incredible. And we'll go ahead and get into that here in just a moment once this loads. But you've seen actually a little bit of a gamma squeeze today. Like, believe that or not, look at this option activity. 444 different interesting trades that were essentially flagged by Ortex's algorithms here, totaling $1.12 billion with a positive order value of 94%. Yeah. What? Yesterday, you had 394 different trades totaling $590 million with a positive order value of 93%. And over the past week, you had 2,114 different trades totaling $3.09 billion with a positive order value of 86%. So like yesterday, today, the entirety of the last week, hedge funds and institutions have been loading up on bullish activity in Tesla stock. Now, you also have an estimated 3% short interest of free float. Doesn't sound like a lot, but that's 85.5 million shares sold short. Today's volume, or yesterday's volume, I should say, 74 million. That's over a day's worth of straight buying pressure would need to take place in Tesla to cover that whole position. Imagine a scenario where Tesla breaks to new highs, very strong delivery numbers, potentially robotaxi news coming any day. We reported today that the Dallas area was seen again with more robotaxi validation vehicles. What if we get robotaxi news very soon? Okay, mix all of that together with, incredible buying pressure that I expect to see in the stock over the next couple of days, mixed with short sellers that want to start covering on short positions. Yeah, 3% short interest, well, it doesn't sound like a lot, for a company the size of Tesla, is massive. You have $36.61 billion sold short in Tesla. Short sellers are collectively, it says here the dollar amount sold short in Tesla is up 52% in the past 3 months. Short sellers have gotten creamed recently in Tesla. And again, Tesla is one of those AI companies where you can't really limit the valuation of Tesla because Tesla's total addressable market is just so large that, that's a fool's game. How do you limit robotaxi? How do you limit Optimus if Tesla is a serious competitor in those industries, which at this point looks very likely? So especially with the function of rates coming down It's not something you want to fight against. Let me just put it that way for you. Now, today, Fitch says the U.S. government shutdown does not have a near-term implication for the AA+/stable U.S. sovereign rating. So that was some of the risk as well, that you could see a credit downgrade potentially. Doesn't look like that is coming. Now, a U.S. government shutdown may weigh on growth. The economic impact of a government shutdown depends on its duration. S&P's global chief U.S. economist estimates a one-week shutdown could reduce growth by 0.1 to 0.15 percentage points, with larger effects if it lasts longer. Additional federal job cuts could worsen the economic fallout for affected workers. So there's a lot of uncertainty what the actual effect is going to be, how dramatic it could be or won't be. But the biggest thing from a market's perspective is the economic data that we're not going to get via a government shutdown. So as of now, tomorrow morning, we will be getting challenger job cuts. We're expecting about 150,000. Last month was 86,000. So that's expected to be, almost a double. It's not expected to be great. The ADP employment change was expected to be positive, almost 50,000 jobs for September. It came in today at negative 32,000. Last month was at 54,000 positive. It was revised to negative 3,000. So there is definitely some problems in the economic data, to say the least. It is boosting the odds of rate cuts today, which is boosting some areas of our markets. It's a slippery slope, though. You want to be careful. Like if we start to see growth, labor markets weaken so much, eventually Wall Street will start to be concerned about a recession. Eventually that will hinder valuations, that will move stocks lower. As of now, though, it's not. Now, some people can actually make the case, myself included, that a government shutdown just raises the probability that the Fed is going to cut rates, even though we're not going to be getting key data sets. Like tomorrow, we will not be getting initial jobless claims, continuing jobless claims, factory orders, or total vehicle sales. That blackout, imagine a scenario where government shut down for a month and we don't get economic data. The Fed needs to act like that data is probably not good, because that's a bigger risk than acting like things are fine and then finding out a month or two later that, oh my gosh, this is a big problem. So it does boost the odds of rate cuts, or maybe even a larger rate cut, just so the Fed doesn't get behind the labor market curve. Again, though, having a data blackout is not exactly great. On Friday, we're expecting the non-farm payrolls and the unemployment rate if the government reopens and is funded again. If not, we will not be getting that data. We should be getting the ISM services PMI still, so that might be the thing that the markets really wait to on Friday. But not getting non-farms, not getting the unemployment rate, it's not an ideal situation, to say the least. But there is some positive anecdotes you could associate with it, at least for now, until the labor market looks vulnerable to a recession. Now, again, personally, in Tesla stock, if my base case around 480,000 deliveries comes to fruition, you're going to see, in my view, a retest of your prior all-time highs tomorrow. The option activity suggests that as well. Now, a prior test of your all-time highs at about $488 per share is going to land you about 6.5% higher for Tesla stock. Now, if we come in over 500,000 deliveries, you're going to have a 10 to 15% day tomorrow. 10% to the upside is going to put you at about 505. 15% upside, it's going to put you at close to $530 per share. That's the kind of thing that I'm expecting tomorrow. Now, if we get the kind of bear case scenario, if you will, 500 or 459,000 or so, it probably pushes you up a little bit, maybe 1, 2, 3%. could put you in the range of, anywhere from today's level, about $460 per share, to maybe as high as, 472, 473. But that would likely not be enough to get us to move to new all-time highs. But again, based on the option activity today, somebody is positioning for an aggressive move higher. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.